Okay, guys. I'm constantly asked about my strength sheet, how I use it to work things out, etc. And I'm pretty much done for the week. So I thought I'd show you. And if it presents something, even better. So we'll flick this over and we'll pull it into sheet. So this is the sheet. I've done pound JPY this morning on the small account, which is what we're building up as a cash builder. There it is there, 4 winning streak. This is running on from last month, which did 28 days in a row without losing a trade. And it's based on sort of the bias tools that I use and one thing another. I'm also doing another one, which is this. I started it this week as well. The growth on this is amazing. Gone from 100 quid to 400 this week using the same principle, but this one's oversized. This one's working on 20 pips a day with a bigger position size. The cash builder is based on a small position size and 10 pips a day. Okay, so that's what that is. But it all comes from this. Now, with them, they are singular products. One's Bitcoin, one is pound JPY. There is also a secondary product in that US JPY, because the asset that I'm looking at is JPY. And what it means is I can do one in the morning, one in the afternoon if I don't get a signal. Okay, so I digress. Reason why I'm sort of explaining that is because it was pulled up in a comment earlier on about whether or not people should be, they have to see this. Well, you don't. But what I do is I do put it in and I update it throughout the day for the guys in Bulls and Bears as they're having a little bit of a chat here. And I do market trackers for them as well. Okay, so I do a lot for the group on a daily basis. But the question that was raised is, do they need this? Well, they don't. The information that's here is readily available. I just visualize it for the guys to see it. But what does it tell you if you're looking at a strength? And you can find these things anywhere. So so the way it's set up, I have ATRs over here so I can see whether the product's worth it in the first place. This bit works out what sort of gaining, slowing, swapping direction, etc. And that's based on the majors. And then we have the strength bit here. So what is currently strong and weak? Well, the US is the strongest. It's moved up 4 position points. And New Zealand has dropped 5. Okay. Would I be interested in trading that as a day trade? Well, if I look over here, it's 80 yards 55 with an average trade of about 6 pips. So the chances is no, not really bothered about that. So what's the next weakest in the puzzle? Well, it's pound. Pound US. Would I look to trade that? Yes. It's one of the majors. So it's a good one. It's telling you there it's a good trade. So that's good. Okay. So I'm happy with that. What was the change of position from the last data sample? Well, the US has surged and the pound is losing ground. So what that tells me is there is movement. So just looking at a basic matrix of working from the strongest asset to the weakest, that's the better one. Right, so that's on my radar. So what do I do now? Well, now I would look to go into market with it, or look to trade it rather. So we'll find it. So there's pound US. Now it's something I look at all the time. So all of my marks are ready. So what do I need to do? Well, now what I need to do is look to analyze this in such a way that it makes sense to me. Now, I always start out on a monthly and I'll work my way forward into the trade. So if I'm looking at this, let me just set something up. I'm going to sort of talk you through it as I go. So the first thing that I'll be doing is looking to see what its ATR is. Now I'm doing this live, so bear with me. Okay, so you would find that here. All right, switch indicators on. So indicators. So we want that one. And it's currently tracking at 82, 83. And it's kind of running from a range of 100 down to 72. So yeah, about 83 is about average, give or take, if you look at the peaks. Okay, so that's what I'm looking at there. So I'll quickly drop that on the front part of the sheet. So what I'll be doing here is that is there. So it's running at 83. So that's going to help me with my target when I come to sort that bit out. Now I'm going to analyze it as a top-down approach. Okay, so nice and simple. What do we think is going to be going on here? Do it in a bunch of baskets. Well, if I'm looking at that, well, the buyers were in control last month. It's genuinely pushing up. Momentum, not so good. And the bolly, well, the bolly is not bad at all. Because one thing that I do pay attention to is what's going on with these sort of things, okay? So flick that off just so that we can see it. Take it down into weekly where we can see a little bit better. So it was still buying last week. We have momentum, as you can see, or direction rather, is in an upward surge. Momentum obviously running out. You can see that here. And what about sort of strengths of this thing? Well, if it's running out, it could be pulling back against this. So strength is definitely fading out. Okay. So we'll take this down into a daily. So what can we see here? What situation can we see? Pull this across. Okay. Well, it was selling yesterday. So are the bears in control of this thing? Who knows? You know, general direction seems to be down. Just like so. Momentum seems to be running out. And is there any strength in it? Well, there is. There's that. You can see it. So it came down with a bit of gusto. So as a basket, it's still a buying market. But as you can see, there is weakness coming into it. Quite a bit of weakness coming into it. Taken into 4 hours. Well, this is telling you a different story altogether. You know, because now you can see almost a retracement coming in. So what does this story tell us? Well, the buyers are back in control. The general direction is kind of consolidating. There is definitely a push of momentum. But is there any strength in it? Well, it's a bit early to say. I would say it's still probably looking like it's a downward move. This could be a pullback. Right, take this into an hour. And then we'll get further into the chart as we go. Now what can we see? Well, the general direction seems to be pulling up. Okay, so I'm happy with that. What about momentum? Well, momentum is definitely gathering. You can see that. And what about strength? Well, it's still got some ways to go because there's reds coming in as well. So I would say that's pretty limited. Okay. Take it down into 15 minutes and we'll have a look, see what's going on there. 15 minutes. Okay. Well, definite general direction up on 15 minutes. There's plenty of big chunky greens, so momentum's there. What about strength? Well, look at the reds compared to the greens. So the strength's starting to build up. Okay. Right, what else have we got? Well, we'll take it into 5 minutes and we'll see exactly what's going on. Take it down into 5 minutes. Well, what can we see here? Well, it's definitely pushing up. You can see that. What about momentum? Yeah, lots of green. It is starting to peter out a little bit. So I would say the strength is limited at this point. So that will be 0. So what I would take from here is we're in a bull market, but it's not particularly strong. We are buying this thing. It's currently buying. And is it good to go? Well, I don't think it's too bad, to be honest. Grading wise is down to a C. And then you can either take a choice as to whether you want to scalp this or move forward, because by definition, C is a kind of a scalp. So let's have a little look. Right, so just sat and work that out. What we're looking at is, well, we need to put in what the trade is. Let me just do that for you. Trade is going to be buy. So it's definitely a buy. So we'll move that over to there. So it's buying across. We kind of know that it's relatively weak, C. So based on its ATR, about 6 pips. All right. So if we know we're getting 6 pips out of this thing, and we've worked everything out, can I get 6 pips up into that level? Well, take a measuring stick. Yes, I can easily get 6 pips into that level. Okay, so where am I going to place an order? Because I know everything's in my favor. 1, 2, 3, 4, 5. Right, well, it came from a selling sentiment and it's in a selling sentiment, but the rolling 15 minutes is buying, which is what we're after. So this could pull back. So I definitely want the order above there. So I'll just drop an order in, put the order in above the top of there, set it for, just set it for a mediocre of like sort of 10 pips even. You know, don't really need 10 pips, but we've got a level up here that it can run at. Realistically, it probably wants to be about 6, but I'm anticipating this moving back on itself. If it does, fine. That 10 pips becomes really easy, because the further the target comes down, the less the chart has to work, which is better. Now, there's another element to this. What about if you're wrong? Well, if we're wrong, step this back. Right. Where will it go if I'm wrong? Well, it'll go here. Right, it's gone into market now. Okay, so we're into market. So you could be wrong here on that swing. You've got a level there that is defending and a swing, but that's pretty tight. You know, the next swing point to look at is that. So realistically, you'd be down here somewhere. So that would be where it would run at. Now, what else can we look at? Well, we can step this out and see. Now, if this is pulling against this entire move and it's now starting to buy back up, there are a couple of things we can check. I can check to see if it's at a turning point, which would be the last major move, which is there. Right, it's failed the turning point. Okay, right, okay. So that means it's coming back to range, which will put it at that 50%, which is up there. Now, another thing we can do is actually measure out the entire move and see if it's valid. Okay, we'll do that right now. So it started all the way up there and has got down to here. So it isn't a full-on retracement as yet, because it hasn't found this 23, which is there. So what that does by definition is tell you to be careful. And if you're careful, you're scalping it. Again, reinforces the C trade, telling you that this needs to be treated with kid gloves. Drop that there. Just push that up to where this came from, which is up there. And there's a fully mapped chart as well. Okay, it's completely mapped out. Just like so. Push this back down to 1 to 5 minutes. Down there. Have I got a reasonable target to get up to there? Yeah, I think I do. push it into 15 so I can keep an eye on this thing. It's pulling against that move. It's running up. That there is a decent target to run at. Now, ideally up here, if I was looking at 6 pips, where would that take me? Take it down. What do you know? 6 pips is bang on the target line from what we just put in. So everything pulls together all the time. And that's what trading is all about. It's about building up a picture, understand what that picture is trying to achieve, and then the most important thing is target. So I'm targeting from this point into that point based on its ATR. Now its ATR is based on the last 14 periods. So it's a decent data sample. The worst thing you can do in trading is swing at the fences when the market's not willing to give it to you. So for me, yeah, I'll run that up into there, take the money, and then I'll just reassess it in the next hour. If I'm happy, amazing. If I'm not happy, don't matter. And that's all you do. You just do it over and over and over again. Keep an eye on your economic calendars. Make certain that when the new spike is coming, you're prepared for it. There's nothing wrong with trading through a new spike as long as you know what that new spike is. Okay? And that's it. So, and if you're scalping, in, out, sorted. All right, let's see if this plays out. Right, guys, that's that job done, and it stopped dead on the level, so I'm quite happy with that. Just quickly make my tickets. There you go. So there's like 30 quid in 10 minutes, if that. But what this illustrates, and it illustrates it really well, is how important these levels are, but how important it is to do your homework. Now, this particular trade for 10 minutes, I looked through multiple time frames to build a narrative. And that narrative is what you've just seen played out. Now, the thing with trading is everyone thinks it's easy. It is, if you know what you're doing. But if you think you're just looking for a moving average cross and sort of structure breaks and all these different bollocks that's sort of talked about, it's not quite that simple. The overarching arc of trading is direction. You get your direction right, it forgives the entry. Now, your entry is only a minimal part of the trade. The direction is king. But the direction has to be within boundaries. And that's what the levels are. Now, the levels will show where the price will try and push to or push away from. If you know how to draw them, you're laughing. You know, I go through it with a squad every single day. This is what that chart looks like. This is what the direction is. And then it's up to them if they want to follow it. Now, I've made a career out of that. You know, I'm not a greedy trader. I'm a targeted trader. If I think it's only going to give me 6 pips in this hour, I'll take the 6 pips. If I think it's going to give me 60 pips in this hour, I'll take the 60. Because one thing that you'll see in the charts is they don't go in a straight line. They'll go up and they'll come back. They'll go up and they'll come back. And a lot of the time they'll go up and they'll come back and retest where they came from. Because that's what the markets do on a daily basis. Now, there are certain surges in the market. That's a little bit like what I was showing you at the start. They are based on the early morning surge that you can catch before you go to work. It's a good thing, you know. Now, on the pound JPY, US JPY account that I'm running, I'm looking for 10 pips a day. That's it. And then I'm going to build it up. Now, I've already done it this year a few times. And if you follow the sort of small wealth builder, the Vanguard, you'll see what little acorns can grow. And that account now is massive. Common sense, guys. It's always common sense. Swing at the fences, most of the time you're going to miss. But if you're conservative and you've got the direction right, you'll pretty much nail it all the time. All the time. And then the only other part of it is, it's a little bit like what I've got wrote on that board behind me. If you look to overtrade, you're wasting your time. Absolutely wasting your time. You want 1, 2 good trades a day. That's it. You know, any more than that, it's fool's gold. It is genuinely fool's gold because it's not sustainable. You can't sustain it that long, and you certainly can't concentrate that long. And then here's the next part of it. It builds ego. If you're winning and you're winning and you're winning, your ego will take over and you'll think you're invincible. Well, that's the day you lose your account. Keep it calm, keep it steady, and just build methodically through. And you'll find at the end of the year, you've got a lot of money. A lot of money. And that's even starting with pennies. So, like my Black Bull, and I do kind of recommend that you go check it out. There's links for Black Bull below. You can start with small money and it'll give you the leverage to open up any asset you want. Not increase the position size, open the asset. And use the leverage to move forward. So if you want to trade pound JPY, you can on 100 quid. Try trading it on sort of some of the other brokers. You can't because margin requirements are too tight. But that'll allow you to do it. And then if you're comfortable with it, just build it up. Simple stuff, guys. You want to speak to me, all my contact details are below. I'm very approachable. I always answer what comes through. And if you want to come along the squad, find details for that there too. So as always, guys, trade well, keep your risk managed, but above all, do what you love. And the money will follow. See you all in the next one.